Hello and welcome to Money Tips. Well, I've said today, I was actually in London today and looking at some properties, and the agents there are reporting that things are quite busy and properties, it has been slow in August as you'd expect, but things are picking up. And I saw a headline today that there's a mortgage price war, which is another thing that's fueling the fire and helping to propel properties to record price levels, to record valuation levels, up actually 7% on August 2020. So it has dipped slightly from the peak of a 12 or 13%, depending on which survey you read, rise up to around about June, July, when we had this stamp duty holiday firing on all cylinders and everyone was rushing to beat that. But now they're still busy. And in fact, there is another stamp duty deadline at the end of this month where people can save up to £2,500 on stamp if they complete by the end of this month in September. But prices seem to be busy in London, and the cheap mortgage prices means that people can borrow more, or at least they have the confidence to borrow quite large sums of money. Even first-time buyers borrowing £300,000-400,000, which would have cost a fortune when I started on a mortgage, and you've got things like Barclays and offering 2-year fixed rates at 0.97%. That's less than 1% for a mortgage, 0.97%. Okay, it's only fixed for 2 years and it will change after that. But you've got similar deals from Santander, HSBC, Halifax. They're all offering very, very low rates. Now that will depend on the size of the deposit you're putting down. It won't be available on the high loan to value mortgages. But it means that with a deposit maybe coming from the bank of mum and dad, that young first-time buyers can take quite hefty risks and borrow chunky sums to buy the property of their dreams. And I've noticed that London's offices seem to be not back to normal levels, but they're certainly busy as of the start of this week. When most people come back off holidays, schools were back, and employers, I think, are asking people to come back to the office. They want people in the offices where they can be supervised and managed and motivated, whatever way you want to look at it. But perhaps working from home is great. I mean, people love it. They can have their washing going in the background. They can save on childcare. They don't have to travel. But is that what the employer wants? And I know when I was in business, you certainly couldn't run the business that I was in from, with remote workers. You needed people there. You needed that group dynamic that was going on. So, I mean, London Transport, LRT, reported, I think it was a 20 or 25% jump in the number of passengers. And I've noticed it today, how many more people there are about and travelling around in London. So that could mean that, prices of properties will again pick up as people think, well, they still need to live not far from their office. I know that last year people were moving off to Devon and Cornwall and that sort of thing and thinking they can work from home forever. But maybe that's not the case. I don't know what will happen. But certainly, flats and that sort of thing they're selling again. And I can see that. Yes, you might have to drop your price a bit, but they seem to be selling and moving again, which is good news for the property market. Now, another thing that's going to come in is, I reported on this last week, is that the government are looking to sort out this problem of social care. And that means in this country we have a social care system which kind of started with the NHS after the war, Second World War, I mean. And they had this cradle to grave system of looking after you from birth till you die. And this is the way it was put to the people. And it's a social care system that will look after your health, your education, and even your care in later life. And it's worked very well up to now, but it's very, very expensive to run. It takes up most of the national budget. But it is in a bit of a crisis, and social care is in a bit of crisis, and several successive governments have tried to sort this out. And now Boris Johnson said he's going to sort it out, but it will mean a 36 billion tax hike. A new dividend tax, which could hit the stock market. This is a tax on the dividends you get from shares. Well, surely that's going to affect the price of shares. It will affect the growth in your pension fund, your investment funds, your unit trust, your stock market ISAs. it will all be affected maybe by this dividend tax if it applies across the board. We don't know all the details yet, but also a rise in national insurance contributions. National insurance is an additional income tax in effect that was brought in to pay for the NHS and care and that sort of thing many, many years ago. And it used to be a small tax. Now it seems to be growing. Certainly when I was in business, I remember it going up, I think from 10 to 11%, which was like a 10% rise really. An employer has to pay on top of that. The employer pays national insurance on behalf of the workers. So it's a tax on employers as well. Whereas if you just put the basic rate of tax up, the income tax, then it would just be paid for but by the employee. But a lot of Boris Johnson's backbenchers are not happy about it. And a lot of people on the left feel that workers today are paying for people that are already retired and maybe better off than them. But you've got to give and take. Young people may feel that, well, why should I pay for care for somebody who's retired and has got a house when I've got all this student debt and I haven't got much money and I can't afford a house? But then the taxes that people paid over the past 40 years maybe have also paid for education. They paid for hospitals and schools and roads and this sort of thing. And all these taxes are paid and they go into the system. There's no money saved from that. It's just spent. And that's the same thing with pensions, state pensions and social care. So at present, if you have assets over a certain amount, you would have to sell your house if you were taken into care in later in life. And now the new proposed system seems to suggest that those with assets between 20 and 100,000 will have to pay towards their care. Now, some of you in parts of the world, like Asia, for instance, might be thinking, what are you all talking about? Well, yeah, in some countries, people look after their elderly. This seems to have stopped here in the last 50 years with this state care system. And more and more people are going into homes or having care at home paid for by the local authority. But there's just not enough money in the system to pay for all this. We know that our taxes don't really cover what the country spends every year. There's no oil money. There's not much oil money coming in now. So, we've sold off our family silver or our state assets. We've sold off the power companies, the water companies, the telecom. British Telecom was a government-owned asset at one time, as was British Gas. So we've sold off all those assets. There's not much else to sell. So where is the money going to come from? Yeah, we can generate taxes and we want the economy to grow to generate those taxes. But generally, we've been spending more than we earn for a long time. So you as an individual, if you were spending more than you earned and each year you were going further into overdraft or you were borrowing money to keep going or you were borrowing on credit cards, it would eventually come home to roost and you would run out of money as the debts went up and up and up. So this is what's been happening to governments, not just in the UK, but in the West in general, as maybe Western economies have, maybe gone into a bit of decline. Maybe that's part of the problem as the rise in Asia and the East comes as the West is the mature economies of the West have slowed down a bit, or certainly the growth is not there. We're not conquering lands anymore. We're not exporting to the world because we've got competition from China, from Korea, from many other countries. So it's getting harder and harder and more competitive to keep growing and growing. So therefore, there's not enough money in the system to pay for everyone and to just say, well, let the state look after me. So taxes will have to go up, and I think this will apply in other countries. In France, we've had riots when the government suggested cutting back on pensions by maybe increasing the state retirement age. I think they retired about age 30 in France. No, it's not quite 30, maybe 60, 58, something like that. And they wanted to increase it. And there's been riots on the streets, literally. Here in the UK, we write to our newspapers, we complain in the pub, and we might even phone up a radio phone-in show and complain about it. But we don't normally go out and riot in the streets as they do in France. That's just perhaps a difference in the culture here. We just have a moan, or we might write to our MP if we get round to it. But nothing much changes. So this whole system of an ageing population, living longer and longer, just doesn't add up. The social care system is in fact broken. If you look at it, they're putting sticky plasters on, if you pardon the pun, to keep it all going. But the amount of money they pour into the NHS just isn't enough, because the more they pour into it, the more costs go up, and the cost of treatments go up, and the more they bring in new treatments, which are more and more expensive, the more new drugs are developed, and treatments that people couldn't get on the NHS now are being given on the NHS, like even a sex change on the NHS, or reduce your weight by having an operation to reduce the size of your belly, or put in some device to stop you, a gastric belt, and all these sorts of things. All these things were not around a few years ago. The NHS just treated sick people. So I think that there's whatever you put into the NHS will never be enough. And the main problem, of course, is that the ratio of working people to retired people has changed and will change over the next few years. And this is why the government has taken action on increasing the state pension age. So a lot of people now thought they were retiring at 65, now will retire at 67. A lot of women who were supposed to retire at 60, that was the deal in those days. Women retired at 60, even though they lived longer, and men retired at 65. So that didn't make sense, but they've equalised that now. But now a lot of women are complaining. They're going to sue the government, because they feel they're unfairly treated. But in effect, there's not enough money, because there's no pension fund with your name on it. There's no little pot of money with your name on it. So when I get to my retirement age, I won't have this pot of money with Charles Kelly written on it. They're just paying my pension out of other people's taxes, the national insurance contribution, for instance, and income taxes. So it's a giant Ponzi scheme. The money comes in, they pay the returns out of new money coming in. But if the new money runs out or slows down, then the system is effectively broken. And like what happened with Bernie Madoff, he went to jail, and he died in jail because he ripped off so many people with his Ponzi scheme. But the government are doing the same thing in America, in Europe. In fact, the problem is worse in countries like Germany, Italy, and France, because they have even bigger pensions to pay out. They have very long-lived populations. They live longer and longer. I know people who are 95 who play golf once a week. He looks like he could go on to 105, this guy. He's in our Rotary Club. I know several people in their 80s are still active. They're walking every day, they're riding bikes, and this didn't happen before. When they designed the state pension age, they thought people might live 1, 2 to 5 years into retirement, and everybody smoked, so that killed off millions of people with cancer, and even though they weren't told it caused cancer. They had a few wars to keep population down. Now, what happens now? People are just living longer and longer. They're eating healthier and that sort of thing. So, therefore, there will never be enough money to pay for this. So, what did the Labour government under the Blair years said? Right, we know what the answer is. We'll just increase immigration. We'll bring in new people from India, from Pakistan, from Asia, from Africa. We'll bring them in to work. To give the worker ratio a higher boost, so that you've got more workers to retired people. And then when Europe opened up, they said, yes, let's increase the population from Europe, from the European Union countries, the new countries that came in, Poland, Romania, all those countries, Hungary, and millions of people came in. So that has, in effect, boosted the tax take. But what will happen to those people when they come to retirement? They will need supporting as well. So you can't just keep pulling more and more people into the country just to pay for those people who are retiring. So that's what makes it a bit of a Ponzi scheme in effect. So that's my Ponzi scheme rant on pensions. But something needs to be done, and the government is right to tackle this. But I know whatever they do, a lot of people will not be happy about it. It's going to upset either the elderly or the young people or the people in the middle or the people who've saved hard to build up assets. It won't. You can't please all the people all the time, as they say. But in this case, it will be the people. The people who will be hit most really are the people who scrimp and save and buy their house, as opposed to the people who say, well, I want a council house and I'm going to let everyone else look after me. And when I retire, if I haven't got enough money, the state will provide for me. Believe it or not, I heard a lot of people say this. If you went to people with a certain mentality and you said, well, you're not saving enough for retirement. How are you going to retire? And they said, well, the state will look after me. And if you say to them, well, you haven't got any life insurance, what about your wife and children if you die? And he'd say, well, let the government look after them. And they meant it. They were serious about it. And his wife was sitting opposite him saying, yeah, I suppose the government will look after us. So people have that mentality. But the people who save and the people who work hard to buy their properties, they are the people who are going to be hit with these new taxes. And that's the way it always is. The government and commentators say everyone should pay their fair share. Well, yeah, but if you've worked hard, why should you give it all away and let half of it go back to the state when you die? That seems to be, this inheritance tax is something that's come in the last 100 years, but is that really fair that people who've worked hard and built up assets should just give half of it away to the government to then spend on other things? Well, in my opinion, no. Taxes should be lower. That would give an incentive to people to work harder and harder if taxes are low and really fair. And bear in mind, the lower paid don't pay much tax. As a percentage, they pay a much lower level of tax than someone on higher rates of tax. Why? Because the first £12,000 of their income is not even taxed. They pay no tax on that. So someone on minimum wage is hardly paying into the system. So someone who comes here to work from Europe in a coffee bar is not paying that much tax. If they're on very low wages, they're hardly paying any tax into the system. So this idea that immigration automatically boosts the economy is actually a falsehood. Yes, higher levels of immigration in terms of bringing in people, doctors, lawyers, scientists, nurses, they pay taxes. They will contribute to the system. But having people coming in to do lower paid work doesn't make sense. And that's why most countries exclude low-skilled, lower-paid jobs from their immigration programs. It's natural. We all want the brightest and best. We all want those people that would contribute to the economy and build it up. Okay, so that's enough about my rant on that. But bear in mind, wherever you are in the world, I think higher taxes are coming to pay for the billions and trillions that they've printed in the last few years, because that also has to be paid back. That's going to take years to pay back. So higher taxes are definitely on the way. Now, can you do anything about this? If you find that you're struggling and you can't really make any extra money, you're saving as much as you can, you've listened to my programs on the Smart Money Manager and you've done all you can to save money, what can you do to generate more income? Well, one way is to generate a side income online. And I've noticed that kids are very good at creating videos and doing things online, putting up posts, building up their followers. And some have made quite a tidy sum of it. Some children are YouTube millionaires. A lot of kids are making money online. So can you make money from social media? Well, yes, the answer is yes. I know that I didn't grow up using IT, computers. In my day in school, which is not that long ago, we used books and exercise books, and the teacher wrote on a blackboard with chalk. And if you talked in class, they threw the chalk at you. What are you doing, Kelly? Shut up! Threw the chalk. Now that would be against my rights. I could send him to prison for that. Now, not really, but anyway, yes, you can learn these things. You can learn, even though kids are very good at these sorts of things. There's no reason why it's not a learnable skill. And you can not only learn how to use social media, but you can learn how to make money on social media. You can learn right now how to stop wasting time on social media and start making money instead. And in fact, a mentor of mine, a guy called Paul O'Mahony, wrote a book about it, Rethink Social Media, where he talks about making money on social media. It's a very good book, but I'd say you don't have to read all of this, right? It's hundreds of pages, and it's not an easy read. I'm not promoting the book very well, actually, am I? But it's a good book. But instead of doing that, why don't you watch a free web class that he's put on? That it's effectively like the movie of the book, if you like. And with the free web class, you can learn in a condensed set in an hour or two. You can learn what he said here and how to start making money on social media instead of just wasting time on social media. So what you can learn is how to use the time you're already spending on the internet to build up a digital business in your spare time without the financial risk of running a physical business or giving up your job. You can learn how to sell products if you already have a product that you sell on a physical basis, or you can learn how to find products to sell online without any risk of you having to buy stock or inventory. You can use the exact strategy that Paul used to make his first million. And I know that he's made several million since then. He's making a fortune. He quit his job permanently, so now he's financially free. As I am, I don't work for anyone. I work for me. And you can discover all of this in the free web class. So who will this benefit? This will benefit people who maybe own a business, or people who want to own a business but not quite sure how to do that and don't want to take the risk of quitting their job. Don't quit your job. Don't even think about it. Keep your job until your business is making more money than your regular salary. Anyone who's serious about building a profitable online business on the side, and if you're tired of wasting time, on social media, I know the first thing in the morning we pick up our phones, don't we? And we start checking our messages. We start checking Facebook and checking Instagram and Snapchat and whatever, TikTok, you name it, it's there. And you can spend hours doing this. But Paul is going to show you a way of how to make money instead of just watching other people. Most of them are making money because you're looking at their ads, you're looking at their posts, you're clicking on their things, you're buying their products, you're making them money. Well, how about start making money yourself? You don't need a website, you don't even need to invent your own product. You don't need to become a mad inventor in your garage, invent the next big thing. All the products are there and the audiences are there. There's billions of people online. We know that online trading, online shopping has been going up exponentially year on year, and especially during the lockdown, of course. And we know how much the share prices of all the tech giants in Silicon Valley have gone up. They've made billions and billions during the lockdown because people are buying more stuff online. So why don't you get in on the act? Amazon is there to help small traders actually get out there and start trading online. That's just one example. Shopify, other companies like Groupon, they encourage you to get online and sell your goods online. That's just one strategy, by the way. It doesn't mean you have to become an Amazon person, but I'm just giving you an example that these big companies make money by opening their doors to people like you and I that just want to get online and start trading but don't know quite how. And you don't have to build your own website. You don't have to have your own shop. You don't have to do these things. You can sell digital products without even selling physical products. So there's 101 strategies you can go into. And in this free web class, Paul will show you how to get started. So have a look at that. I've put a link there below. Do it now. Don't delay this, because this could change your life. So rather than say, well, I'll do that tomorrow, I'll do that next week, just register for it. Or you can watch it right away. And I guarantee it will blow your mind. It will change the way you think about things. And instead of watching other people make money online and on social media, you can start making money on social media yourself. So thanks for listening. Click on the link below and really it will change your life.